and Resource Collective for this Wednesday, June 16th. This is a special session we have today. Glad you could join us. I'm Robert Theobald, Small Business Ombudsman and Vice President of Small Business Services at the Arizona Commerce Authority. As we like to do, we always start with sharing all of our community partners. We could not do these boot camp sessions without our community partners, their time, their effort, and their expertise. The Small Business Boot Camp is designed to help small businesses return from the COVID crisis stronger than ever. It is a statewide initiative supported by all of those community partners. And not only is it the boot camp webinar, but it is a resource collective and a content library. So on our bootcamp website, this website that you went there to register for today's session, you'll also find the upcoming sessions, the resource collective link, and the content library. So the resource collective is a set of tools and guides provided by our community partners to help support small businesses during this time. There's a lot of great information on there, a lot of great resources and guides for all different industries to help support you as you return from the COVID crisis. The content library is the collection of all the boot camp sessions. Each one of our boot camps we record and we post them in the archive section on the boot camp website. This has created a very diverse resource of over 140 webinars that are recorded and available to you with the slide decks and any of the other materials that our presenters shared during that boot camp. And you can go back at any time, watch any of them. There's no cost. They are available to everyone. And with that 140 sessions, over 140 sessions, you can find information on marketing, on telling your story, on Business 101, on financial resources, on PPP, on legal aspects. There's all kinds of great information in that content library. Additionally, we have a couple great websites that you can access for COVID information. First is the state's COVID information and resource page, arizonatogether.org. And then the Arizona Commerce Authority set up the Arizona Commerce Authority's COVID-19 business resources webpage, azcommerce.com/COVID-19. It has business guidance, it has financial information, and other programs related to business during the COVID pandemic. Additionally, the ACA offers a number of programs to help support small businesses during this time. We have our small business services, our workforce division, and our Arizona MEP that focuses on manufacturing. Additionally, we have our small business checklist. Our small business checklist is designed to help entrepreneurs understand the licensing, registration, and compliance needs at the local, state, and federal level, and along with a number of other great things on helping in planning development and marketing and so forth with your small business. So you can find this on our website as well. So I want to jump into some quick updates. We will post the links for these updates in the chat, but the main one I want to share today is the OSHA COVID-19 guidance. OSHA came out with some guidance for COVID-19 for businesses, and so we will share the link for that in the chat, but it is a great website to check out and see what their guidance is regarding COVID-19. There are new updates, new guidance that they shared. So with that, I want to have a quick look at the upcoming sessions. Of course, today this coming Thursday, tomorrow, we have Karen Russo who's going to talk about how to recover from financial loss. And then next Tuesday, we have a great session on TPT and sales tax. If you're doing any online sales, this is definitely a session that you want to attend so you can understand your responsibility for Arizona sales tax and online sales taxes for your business. Then on next Thursday, on the following Thursday, we have How to Be a Great Boss with Tom Weisner from Traction Point. And then we have the following week, Consciously Addressing Unconscious Bias. Great session, I've heard it before, and it's how you can use that to benefit your business. So a lot of great upcoming sessions. So with that, we're going to turn the time over to today's presenters on our PPP Forgiveness session. We have Amber Cordova, who's the Director of Business Education and Consulting Services at Prestamo CDFI, and Carrie Ann Todd, Accounting and Insurance Senior Manager at BeachFleischman. Amber and Carrie Ann have been on with us on a number of different sessions. They are our PPP experts, and they do a phenomenal job. So with that, I'm going to stop sharing my screen and turn the time over to both of them. While they're getting their screen set up, if you have questions for today for Carrie Ann and Amber, please post them in the Q&A. And we will go through as many questions as we get to. We've got a very full presentation today. And so please post up your questions and we will try to get to them throughout the session.
Well, good morning, everybody. Thank you so much for joining us today. Today, obviously, we'll be talking about PPP loan forgiveness. This presentation is based on the relevant guidance that we've been provided, but should not be substituted for legal or financial advice. Today, we're going to be talking about forgiveness deadlines and what you need to make sure you're doing by when in order to make sure that you've applied for and can receive full forgiveness. Carrie Ann will go over the 3 different types of forms and who would be eligible for what type of form. We'll talk about the dates and FTE requirements, wage rates, the covered costs that are eligible to be used for your PPP forgiveness, and we'll quickly go over some of the documentation requirements that you'll need to have, and we'll have a Q&A session at the end. So please make sure that you add any questions to the Q&A, and we'll work on answering those throughout the presentation as well. The covered period is an 8 to 24 week period. So that date starts when the funds are deposited into your account, and you get to choose whether you're going to use 8, 9, 10, all the way up to 24 weeks. So that's your covered period. And then you have 10 months from the end of your covered period. So essentially you could have the 6-month period, which is 24 weeks, 6 months, plus an additional 10 months to make sure that you have applied for forgiveness. There's a lot of confusion about I need to apply within 10 months or I need to apply by the end of my covered period. You have your covered period that you choose, 8 to 24 weeks, plus 10 months after that to make sure that your application for forgiveness is submitted through to your lender or whoever your lender is using to manage the forgiveness. You won't submit directly to the SBA. You'll work with your lender to get them the application in the format that they're requesting. You can go online and look at the different forms, but I'd recommend making sure that you understand what the lender portal or what their requirements are going to be for you to actually apply for forgiveness. Now, if for some reason you do miss the deadline and you've gone the 24 weeks plus the 10 months and you've missed out on applying for forgiveness by the deadline, you will be responsible to start making payments on your PPP loan, and that's the principal and the interest portion. However, if you do have to make that first payment, you can still apply for forgiveness after that and receive forgiveness. Here's the actual, we're not going to go through and read this, but this is the actual source on loan forgiveness. You can look in the slides. Now, the lender is going to have to receive your application by that 10-month period, your covered period plus 10 months. So once you've submitted it to your lender, then your lender shouldn't charge you for any of the principal and interest payments until the SBA makes the final determination. So here's an example. If you received your first PPP loan on April 10th, 2020, you're going to want to make sure that you submit your forgiveness application to your lender by July 24th in order to avoid making any payments. So that's the total covered period plus 10 months. And you get to choose your covered period. You can choose anywhere between 8 and 24 weeks. That's up to you when the period that you've used the funds. The 10-month rule is also assuming the 24-week covered period within the regulations. So the actual deadlines are going to be based on you submitting your application to the lender. Your lender may have additional questions or require additional documentation. So as the lender's responsibility is to make sure that you've satisfied all the requirements of forgiveness. The lender will make the recommendation to the SBA, whether it's for full or partial forgiveness. And then the SBA will have 90 days to either approve the application, ask for more information, or deny the application. So you want to make sure that you're providing your lender everything that they're asking for, because the lender is responsible for making the recommendation to the SBA. And then the SBA can come back over top of that. If the SBA asks for additional documentation, they want that documentation returned back to them within 10 business days. And it's really important to be cooperative, whether you think you should be providing it to them or not. They're the ultimate decider in whether or not you're going to get loan forgiveness. So just make sure that you're providing timely information back to both your lender and the SBA if it is requested of you. Again, if you do miss that 10-month deadline after your covered period, you'll have to start making the monthly principal and interest payments to your lender. Your lender will start collecting those payments. You can still apply for forgiveness and you can still receive full forgiveness. If the SBA does issue you full forgiveness, you can work with your lender to get a refund on that first payment that you paid. If forgiveness is denied, whether it's full denial or you're only approved for a partial portion of your forgiveness by the SBA, there is an appeal process that you can go through. We're not going to go into that, but that is something that you can look up a little bit more on the Treasury website to learn more about the appeals process. So there is an option if for some reason forgiveness is declined. If you don't receive 100% forgiveness and you're not going to go through the appeal process, or you lose the appeal process, the unforgiven portion of your PPP loan turns into a loan. It's a 1% interest rate, and it is payable over 18 or 54 months. So your payments will start, you'll have a payment that's due every single month. And the term is determined by when you received your PPP loan. So if your first PPP loan you received prior to June 5th, 2020, back last year when PPP started, you'll have the shorter term unless you work with your lender to get a longer term. Everybody else that received a PPP after June 5th, 2020 will have that 5-year term. No collateral or personal guarantee is required, and there's also no prepayment penalty. Carrie Ann, can you move it to the next slide? For some reason there we go. Okay, now if you are a PPP2, can you go next? If you received your second draw PPP, the same rules and the same process are going to apply for the PPP2. You're still going to go through your lender, whether it's the same lender you used for your first draw or a different lender. You're going to have to go through the PPP forgiveness process with your lender. So if you use somebody for your first draw that's different than the second draw, you'll have to go through each individual lender for your PPP forgiveness applications. I know that a lot of lenders are not right now, they are not doing the PPP draw 2s because they're still building out the systems. There are a lot of new lenders that just started lending in 2021, so they're still working through their forgiveness, but you want to make sure that you reach out to your lender to find out what the process is going to look like. For PPP2 borrowers, if you got your second draw, you are going to have to provide a 25% revenue reduction documentation to show that you had a decrease in your gross sales, either 2019 to 2020 or 1 quarter of 2020 compared to the same quarter of 2019. You weren't asked for that up front if your loan is under $150,000, but you will need to provide that if you're applying for forgiveness on your second draw. So you want to make sure you're prepared with that. And again, just discuss with your lender the timing on the PPP2 second draw application. And And I think with that, I'll turn it over to Carrie Ann, who will go through the different forms that will need to be filled out.
All right, thanks, Amber. Okay, so I'm going to go through the section on all the different forms. We're going to talk about dates and FTEs, and I'm going to talk about wage rates. And I'm going to go through, we're going to cover a ton of slides, like 40 or 50 slides in about 10 minutes. And the reason I'm doing that is I want to go over it really high level, just to kind of touch on the highlights. And then after this presentation, they will send out a copy of the slides to you, so you'll have all the details later. But instead of getting bogged down in the details, and trust me, there's a lot, we're going to try to stay high level with each one of these concepts. So the first thing we're going to talk about is forms. The forms can be found on the website located at the bottom of this screen. It's part of the Treasury website, but it's a special assistance for small business section that they have. There are 3 versions of the form: the S, the EZ, and the regular, and we're going to talk about each one of those and which one you should fill out. Okay, so the 3508S, who's eligible for this one? So in order to be able to file the 3508S, which is the easiest, most simple form, you have to have a loan amount $150,000 or less. Now, there is an exception if you, with your affiliates, so if you have multiple businesses that got multiple PPP loans, and the sum of all of those loans is 2 million or more, you can't use the 3508S for any of your entities. It probably has minimal application here, but I wanted to point that out. So if your loan is less than 50,000, you are not subject to the FTE and wage reduction restrictions that we're going to talk about later in the next section. Okay, but so you can fill out the 3508S if your loan is under 150,000, but you're only exempt from the FTE and wage reduction restriction if your loan is less than 50,000. And that's a really important distinction that I want to make sure everyone is clear on. Eligible costs are all still the same. And then the documentation requirements are the same. Depending on your lender, they may or may not ask for any support if you file the 3508S. Some of them literally just ask for the 3508S. Some ask for some minimal documentation, but there's certainly a lot less documentation required to be submitted if you are eligible for the 3508S. Like I said, if you have loans between 50 and 150, you're still subject to all the same rules that apply to the easy and the regular form. So sometimes it's just easier to file the 3508 EZ if you have restrictions. You kind of just have to assess your personal situation. So who's eligible for the 3508 EZ? We'll go through that in detail. There's 3 different ways you can qualify to file the EZ. Number 1 is you can be a sole proprietor with no employees. Okay, but honestly, if you're a sole proprietor with no employees and your loan is less than 150,000, I would file the S because it's probably going to be easier for you. The second option is if you meet 2 tests. Okay, the first one being certify that you did not reduce the salary or hourly wages of any employee by more than 25% during the covered period as compared to Q1 of 2020. And that was a big restriction of the program. It said, okay, we're going to give you money to pay your payroll, but one of the deals is you can't reduce people's wages. You've got to keep paying them what you were paying them in Q1 of 2020, or at least up to 75. You have to at least pay 75% of what you're paying in Q1 of 2020. And then the second certification is certify that you did not reduce FTEs between January 1 of 2020 and the end of the covered period. And we're going to talk about FTEs in detail here shortly. So that's the second way you can file the 3508 EZ. You're going to have to include some more documentation to support those certifications in order to be able to do so. And then the third way, like I said, I'm skipping over a bunch of slides, but you're going to have the details later when you get the slides, but I want to go really high level here. So the third way you're eligible to file a 3508 EZ is if you meet these 2 tests. Again, certify you did not reduce anyone's wages or salary. That's a really critical piece of the program. The SBA did not want you to reduce people's wages. They wanted you to keep everyone at full employment at full wage rates. The second one is certify that you were unable to operate during the covered period at the same level of business activity as before February 15th due to compliance with COVID restrictions. And that's really critical, that last piece. The easiest example of this is a restaurant, okay? Restaurants were unable to operate at the same level because, initially they were takeout only. And then dining rooms were open a little bit. And then they were released to 50% capacity. And they stayed at 50% capacity, right, until the end of the year. So restaurants, assuming they didn't reduce wages, which most of them didn't because they were fighting for employees to keep them, most restaurants qualify for the 3508 EZ. And anyone else in a similar situation. And you have to have been required to shut down by a government order. It can't be, well, I didn't have enough people, so I shut down voluntarily. It was a government order that said you have to close or you have to restrict your operations. So that's really specific. Same kind of thing, similar documentation. If you are going to go this route, you do have to keep on record copies of the federal, state, or local COVID guidelines that your business was required to follow that restricted the ability to operate. Okay, if you want to just go straight to Governor Ducey's orders, you can just basically Google Governor Ducey's executive orders and it'll take you to the website and there's a list and they're in order. Okay, so those are the three forms, or those are the first two forms. And so the 3508 is the last form, and I call that the regular form. And basically, if you don't qualify for the S or the EZ, you have to do the 3508. It requires a little bit more detail to be reported on the form. You have to disaggregate some of your payroll information into different categories of employees. They're going to ask for more documentation. You have to provide all your FTE calcs. So there is more documentation required, but again, if you're not eligible for S or Z, you got to do the full form. So that's kind of a summary of the forms. And like I said, those are available on the website, and you submit that form to your lender. You do not submit anything straight to the SBA. So whoever gave you your loan, that's who you submit this form to, and then they will approve it and then submit it to the SBA. So you will have no direct interaction with the SBA. So dates. So the critical dates are determining your covered period, and your covered period that they refer to starts on the day you got your loan proceeds. So you have to know when you got the money, because that's a critical number or a critical day they're going to ask for on your forgiveness application. And then you can define your covered period. It can be anywhere between 8 and 24 weeks. And that's kind of up to you based on how the rules apply to you. Most of our clients are going with the full 24, reporting all their costs and just making sure they've got enough in there to get the full forgiveness. There's a concept of alternative payroll covered period. We're not going to talk about that at all. In my opinion, you shouldn't need it now that there's the 24-week option. You should be able to just follow the regular rules and not really worry about it. So let's talk about FTEs. So one of the requirements of the program is you can't reduce your FTEs. And FTE stands for full-time equivalent. And within the parameters of the PPP program only, a full-time person is considered 40 hours a week. So the basic math of it is, in my examples, Joe works 30 hours a week, he's a 0.75. Mary works 20 hours a week, she's a 0.5. Bob works 55, he's a 1.0, because nobody can be more than one. So the concept behind it is you have to calculate your FTEs. So you would look at all of your employees and compute what they were during the covered period. So if your covered period is 8 weeks, 8 times 40 is 320 hours. So you would look at how many hours each person worked in that 8-week period and compare that to a denominator of 320 to compute their FTE. You add them all up, and that's your total number of FTEs. So that's the basic concept of the FTE. And I'm not going to really spend a lot of time on the FTE other than that, because you're really just computing it, and then you have to compute it again for your base period, which in most cases you can use January, February of 2020 as your base period. So you compare those two periods, and you need to be equal to or more in the covered period to avoid taking a reduction, potential reduction on your forgiveness. And all of that is explained in detail in the instructions to the Form 3508. If you want more information on that, but there's also a ton of slides in here that we're going to skip right through that talk to you in detail about how to compute FTEs, if you're weekly, if you're biweekly, if you're semi-monthly for your payroll. What is the base period? How do I compute that? How do I figure that out? So go back, if you have questions on all FTEs, please go back to these slides. But the last thing I want to talk about is the wage rate. So if you remember when I was talking about, and I know I'm going really fast and I apologize for that, but I want to make sure we have a ton of time for Q&A. So if you have questions as we go along, please post them on the Q&A, and Amber and I will get to those at the end, or while she's talking, I'll answer. So you remember when I was talking about the 3508 EZ, and I said, you know, you can't reduce wages more than 25%. So that's what we're going to talk about right now, is that wage rate reduction. So if you do reduce wages more than 25%, there's a dollar for dollar penalty, basically. So here's the concept behind that. Let's say you pay Joe $1,000 a week, but during the covered period, you cut him down to, oh, I have myself over the slide, $650. Still full-time, working 40 hours a week, but you're only paying him $650. So in this case, you have, you exceeded the 25% reduction, right? Because the 25% would be reducing him down to $750. You reduced him down to $650. So that $100 is a penalty for the 8 weeks. And the 8 weeks here in the example is the covered period. So if you chose a 24-week covered period, it'd be $100 times 24 weeks. So if you were forced to or had to reduce wages, you need to look at this formula, because if you did reduce wages, even for one person, more than that 25% allotted cushion, you are not eligible to file the 3508 EZ. And if you are eligible to file the 3508S because your loan is less than $150,000, you're still subject to this rule, and you would still have to reduce your total eligible costs by this wage reduction penalty. It doesn't mean you won't get 100% forgiveness. Mathematically, I've only seen 2 clients over the last 13 months that did not get 100% forgiveness. One, he literally, the client literally had no work, so he laid off all of his employees. So when you lay off all of your employees and you're not paying payroll, you're not going to make the program, right? The other one, they were a home builder. They didn't have any homes to build, and they didn't keep their employees on payroll because their employees wanted to go work elsewhere because they could. And so they didn't have enough payroll and other costs either. But those are 2 really extreme exceptions. Everyone else I've seen out of the 200 clients that we've worked with is getting 100% forgiveness. And they're overcoming these reductions. They're overcoming the FTE reduction penalty, and they're overcoming this wage reduction penalty mathematically, just because you're able to incorporate 24 weeks of costs. So anyway, I'm going to skip through the rest of these slides, and you can read these later, of course, because I want to get to the covered cost section that Amber's going to cover. And she's going to talk about what are all the eligible costs, both payroll and non-payroll. So let me give you control, Amber.
Wonderful, thank you. All right, so the covered costs, you want to make sure that you are using, I'm going to break it down. If you are a sole proprietor, an independent contractor, a single member LLC, or a qualified joint venture with your spouse, and you file a Schedule C, and you utilize your Schedule C to get access to your PPP loan, then you are eligible for what's called owner compensation replacement, and that's different than other types of covered costs. So if you are self-employed and you received owner compensation replacement, you want to make sure you use that over a minimum of 11 weeks in order to get that full forgiveness. If you use it over less than 11 weeks, then there will be a reduction in what you're eligible to receive in forgiveness, and you will have to pay a portion back. So we recommend that you do either a monthly draw over 3 months, or you can do weekly draws. but that's owner compensation replacement that you're paying to yourself. You're eligible to use that however you want to, because it's just like payroll to yourself as a self-employed business owner. If you have employees and you qualified for your PPP as an employer and you use your W-2 wages, then this is going to be applicable to you. So remember that you need to use a minimum of 60% for W-2 payroll, and that can be either the wages, salary, that can be retirement, employment benefits, and I think that's in here as well. But the other types of covered costs are going to be rent, interest payments on fixed loans. So for example, if you happen to have an SBA loan, the interest payment, you can use your PPP to pay for that. You can't prepay and you can't use it for the principal portion. There's also utilities, and the utilities are going to include things like electricity, water, internet, gas and propane, those types of things. Now, when the new act was signed into law back in December, it also added some additional expenditures that were eligible. So if you had property damage costs as a result of civil unrest in the summer to fall of 2020 that were not covered by insurance, you can use your PPP for that. If you need supplies for your business, whether that's if you're a restaurant and it's your food or other types of supplies you use at your establishment, those are costs that you can use the PPP for. And also covered worker protection expenditures. So if you needed to buy masks, sanitizer, sneeze guards, stickers for the floor to direct traffic, if you needed to make modifications in order to meet health guidelines, those are all eligible uses of your PPP funds. Remember that the amount of wages claimed cannot include qualified sick leave wages, which is a credit under the Family First Coronavirus Response Act, and they cannot include qualified family leave wages, also under the Family First Coronavirus Response Act. Basically, that's doubling up. You're getting to use funds and getting credited for them. Again, owner compensation is limited to the lesser of $20,833 or your 2019 compensation multiplied by, you take the total amount, divide by 12 and 2.5. So remember that this 2833 is across all businesses. So if you have multiple Schedule Cs and you applied for PPP loans for multiple Schedule Cs to get owner compensation replacement, you are actually limited to a maximum of $20,833, and you might run into an issue with forgiveness. They might ask for an affiliation, and I have seen this where a business applied for forgiveness and the SBA said, well, you have these two other businesses, you need to create an affiliation form. And they asked for this, and the owner actually received 3 PPP loans for the $20,833, but they were only forgiven for 1. So that is something to be cognizant of. This is a maximum of owner compensation replacement of $20,833 across all of your businesses as owner compensation replacement. If you are a partner, you still apply to the $20,833 rule, but you didn't use your Schedule C, you would have used the Schedule K1, line 14A, minus any Section 179 expenses, and at a factor of 0.9235. The types of payroll costs that are going to be eligible are going to include any W-2 wages that were paid, and that includes, okay, I don't know why this is, there we go. Carrie Ann, can you move it to the next slide?
Yeah, sorry. I think every time I try to answer a question, it takes back control unintentionally. So I'll just quit answering questions.
Sorry. Thank you. So To clarify, if you do have multiple Schedule Cs, but for the different Schedule Cs, you had different amounts and they weren't all capped at 2833. For example, if you had a 6,000, a 7,000, and a 7833 PPP, the total there is 20,833. So you're eligible for full forgiveness up to the 20,833. Payroll costs are going to include any wages that you pay to W-2 employees. So these are not 1099 contractors. Remember, a 1099 contractor is a subcontractor, and the subcontractors don't have taxes withheld. In addition, that would be the amounts of health insurance that's paid by the employer. So if you have a health insurance plan and you pay a portion of that monthly premium for your employees, that portion can be considered in the forgiveness process, but not the amount that the employee pays, because that's already a part of their gross wages. Okay. Retirement plan contributions, the same thing. This would be the amounts that you are paying on behalf of your employees. So if you have a 401k match that you provide for your employees, that portion is eligible for use and forgiveness. Carrie, do you want to talk a little bit more about the accelerated costs and this portion of the retirement plan contribution?
Sure. So when they're referring to accelerating costs, I think what they're inferring is they can't, if your covered period ends on, let's say, September 15th of 2020, you can't include in that covered period and deduct anything, or include as eligible costs anything that is attributable to a profit sharing that is earned from September 15th to December 31st, 2020 or beyond. So in other words, you can't try to cram money into your profit sharing plan during the covered period if it's not related to wages and profit sharing contributions earned by employees during the relevant period. The easiest way to look at that is just to take as retirement plan contribution what's paid, with the exception of not just, like I said, cramming a bunch of money in there and trying to take it as paid. It needs to be contributions that were paid that were related to either accrued in 19 and paid during the covered period, or earned in 20 and paid during the covered period.
Okay, thank you. So we're going to skip past the rest of the payroll portion just to make sure that we have enough time, and we'll talk about the non-payroll costs. If you're not claiming employee retention credit, you probably won't need them. And we're including the rules for all categories of eligible payroll costs. But what we're finding in our forgiveness applications is that if you use a 24-week covered period, because your PPP loan was actually based on 2.5 months, which is, 12 weeks, 10 weeks, you're using it over 24 weeks. So your payroll costs are qualifying. You're using way more in just the wages that you've paid to your employees over the covered period than the actual amount of your PPP loan. So at the end of the day, a lot of people don't have to provide any additional documentation. So again, if you do have W-2 employees, you need to use a minimum of 60% for those W-2 wages or other covered payroll expenses. You can use up to 100%, as I just mentioned, but you are eligible to use up to 40% for non-payroll costs. So that is going to include rent, which is real or personal property under a leasing agreement. And the important thing is that had to be in effect on February 15th, 2020. If you opened up your location, physical location after February 15th, 2020 and signed a lease, it doesn't qualify. It needed to have been in effect on February 15th, 2020. Real property is going to be building, storage unit. Personal property would also be equipment or vehicles. If you have a mortgage, the interest portion is eligible for PPP usage, but just the interest portion, and you cannot prepay. If you don't need to use this in order to get forgiveness, then it's a lot of extra paperwork that you probably don't want to worry about. Again, the simplest thing is if you paid your employees enough, the full amount of the PPP loan, then you just want to provide that wage information and you don't have to worry about non-payroll costs. Utilities are an eligible use, again, up to 40%. This includes services for electricity, gas, water, sewer, transportation, telephone, or internet access, again, that needed to be in place prior to February 15th, 2020. And remember, to be eligible for a PPP loan in the first place, you had to have been in operation on February 15th, 2020. Again, interest, not principal, and any capital leases would not get counted as rent since they're a financing agreement. Other operations expenditures are going to be software or cloud computing services that facilitate your business operations. So that's product or service delivery, any processing fees like to your merchant provider or Square, payment or tracking of payroll expenses. So if you use an online payroll company like Gusto, ADP, human resources, sales and billing functions, counting of tracking supplies, inventory, record, and expenses. So your monthly QuickBooks fee items are operations expenditures. Again, if you had property damage or vandalism, looting due to those public disturbances that occurred in 2020, that your insurance or other means did not cover the replacement or repair, you can use your PPP for those property damage costs, but you will need to make sure that you provide documentation on those expenditures and probably write a statement about, the damage that occurred. And then covered supplier costs are going to be expenditures made to the supplier of any goods that were essential for the operation of your business at the time that the expenditure is made, whether that's pursuant to a contract or a purchase order that was in effect prior to beginning of the covered period. Or if it's perishable goods, say you needed, items for your food line, that's the contract order or PO that needed to be in effect before or at any time during the covered period. So if you had a purchase order out before you got your funding, hadn't paid it, you can use your funds for that. If you ordered during the covered period of 8 to 24 weeks, then that's also covered under the PPP.
Hey, Amber, can I jump in on this one?
Yeah, please.
So if a business really needs a lot of costs to try to get their 40%, and this is probably the most critical for someone who's trying to maximize the employee retention credit if they qualify for that. And we've done a whole presentation on that. If you look back in the bootcamp history, you can watch a presentation on the employee retention credit. But if you qualify for both programs and you're really trying to maximize them, you're going to need to maximize these other non-payroll costs: rent, interest, utilities, and then all these 4, I call them the weird categories that they added. This one can be your biggest gold mine, because let's say you're a manufacturer or you're in construction. This would include anything that you paid for during the covered period that was sitting in your accounts payable, or you had issued a PO for on the first day of your covered period. Okay. So that could be a lot of stuff. If you are, and that's for that. So that's for all goods. That's for all industries. If you're, and that's talking about cost of goods sold. Okay. Lumber, whatever, they just go wild. It probably includes it all. Now, if you're a restaurant or another industry that uses perishable goods, restaurant is the easiest one to understand. It doesn't have to have been in your AP, or you didn't have to have a PO in effect at the beginning of the covered period. For perishable goods, you can count anything you bought and paid for during the covered period. So think about that. If you're a restaurant, that's all your food costs. Your perishable food costs for the entire 24 weeks become an eligible cost under this covered supplier. So this is a super generous category if you're digging for costs to get you to the 40% in order to maximize. So I just wanted to kind of tell you that, because it seems too good to be true once you dig into it, but I think it just is what it is.
Yeah, so it sounds like one of the smart things to do is if you do have W-2 employees and you're looking to maximize your credits, that you speak with A, watch the presentation, but B, speak with your accountant or your CPA about how to be strategic to maximize your credit and how to maximize forgiveness on your PPP at the same time. The next category is covered worker protection expenditures. So again, if you needed to adapt your physical location in order to accommodate for health and safety regulations, or you needed to buy any types of equipment or worker protection, then those are all covered expenses as well. Again, it's all related to the maintenance standards for sanitization, social distancing, and other worker or customer safety requirements. Now, once you have all of your covered costs put together, you want to make sure that you have everything separated out, and you can see this is what we spent in payroll wages, this was our retirement portion, this was our health insurance portion, this is the portion that we used for rent, this is the portion we used for utilities. You want to make sure that you're using at least 60% for payroll expenses, and the other 40% can be for those other items that we talked about. If you're not going for the credits and you used 100% equivalency to your actual PPP loan, just use the wages. You don't have to use the other categories. You can just use wages. Again, if you are going for the employment credits, then you'll want to be strategic and make sure you're maximizing up to the 40% on those other operations expenditures. If you don't spend all of the money during the 6-month period, which would be difficult to believe that there's many people out there that aren't spending it all, and except in the case that, you know, Carrie Ann mentioned that they let go of all of their employees or they completely shut down, you will have to pay that back, whether it's upfront or over the loan term. Again, this is math, a lot of math, and if you need additional assistance, then there's a lot of different resources available. You first want to look at your lender and ask your lender, you know, can you help me fill out my application? They might not have the ability to do that, especially if it's an online lender or maybe one of the banks. You can reach out to the women's business centers. There's one in Phoenix, there's one in Tucson. There are small business development centers, SBDCs, all over the state. There's your accountant, bookkeeper, CPA. They can all probably help you figure out and complete your application. I'm going to briefly just talk about the documentation, but not go into a ton of detail on what you're going to want to provide so we can make sure that we have time to answer any questions. You want to make sure that you have adequate documentation on all of your full-time equivalencies. So you want to make sure that you have wage records and that you're able to show that it's consistent with the quarter prior to. And you want to make sure you have all your payroll tax reports. You want to make sure that you have account statements for health insurance, for utilities, for rent, for interest. Err on the side of caution and just have everything prepared. It's easier to give everything up front, even though it might be a pain to pull down, you know, your SRP bill and provide a copy of a bank statement. But if it's the difference between receiving full forgiveness or not, it's definitely worth taking your time to do. You might need to provide bank statements, copies of canceled checks. Keep a spreadsheet of all the covered expenses. That's a nice, easy way for you to make sure that you're managing and understand the different breakdowns. If you pay a bill that's a part of the covered cost, when you're paying the bill, just put it in a file. Save a file on your desktop and save it to the desktop. Print it out, highlight, put copies of your bank statements in the folder. Same thing with your payroll reports. If you're tracking it along the way, it makes it much easier for you when it comes to forgiveness time, instead of trying to figure out where all those documents are and pulling them down. So just be proactive about, you know, accumulating your documentation so that you're ready to apply. And you don't have to wait till the end of the 10 months, and we highly recommend that you don't wait your full covered period plus 10 months. Once you've used the funds, you can apply for forgiveness with your lender and get into the pipeline and just get it done and over with. You don't have to wait. If you do not provide the necessary documentation to your lender that they are requesting or that the SBA is requesting, you're not going to get forgiveness. You need to provide both your lender and the SBA anything that they ask for, and you need to make sure that you keep these records on file just in case they do decide to audit. There will be spot audits that happen on some of these accounts. If you do not follow the rules for the use of proceeds, so say for example, instead of using your funding for payroll or the other covered expenditures, you decide you want to go out and buy a new vehicle. That is fraud, and you might have to pay misused amounts. There might be fees, and there could be jail time or other types of penalties. So you want to make sure you follow the rules. You want to use the funds correctly. Remember that these are taxpayer dollars, and this is a federal program. So we highly recommend that you use things as they're supposed to be used. I'm sure we've all seen in the news some of the ways that some of the larger PPPs have been used between jewelry and Lamborghinis and other types of things. We highly recommend you do not make those choices. If a business does not receive 100% forgiveness, so for some reason you do not receive forgiveness, it does make sense to repay the loan as quickly as possible and to start the clock on the document retention period, because you do have to keep all of your documentation on file for 6 years after the date the loan is forgiven or repaid in full. And at any time for 6 years after that, you can be asked to produce those documents. So that's quite a long time. So make sure that you have all of the documentation saved. And again, remember for a 25%, if you're a second draw, you do need to make sure that you have that 25% reduction. You need to be able to justify that you had a 25% or more reduction in 1 quarter of 2020 compared to that same quarter of 2019. Or you can use your 2019 total gross receipts versus your 2020 versus 2019. So if you have more questions about that, reach out. I know we kind of just breezed through that. But as Carrie Ann has put here in this slide, the intent is to make sure that money goes into the hands of your workers or to you as a self-employed small business to make sure that you have owner compensation replacement. Yes, it is tedious to have to follow all the rules and provide all the documentation, but the math is worth it because this is a fully forgivable loan to your business if you've documented and used the funds correctly. So it's definitely worth it at the end of the day.
All right, Amber, because I kept hijacking control of the mouse every time I try to answer a question, I'm gonna go ahead and answer some of these live. So there's two, excuse me, that are related. One of them says, is there a safe harbor rule for employees who resigned? And then are employees who voluntarily terminated during the covered period included in the FTE reduction? So the answer to both of those questions is yes, there's an exemption. It's called the FTE exemption. And if someone left and you were unable to replace them, and that's key. So if somebody left or you fired them for cause, you don't have to count that against yourself in the FTEs, but it's critical that you cannot have replaced them. So let's say Amber worked for me during the cover period. She's like, this is just too much for me, I'm quitting. And my business can't get along without someone in Amber's position. And so the next week I replace her. I can't take credit for Amber quitting because I replaced that position. So you have to look at individual positions, and you would only be able to take that exemption for positions that you did not, positions that you were not able to fill. But if you look in the instructions to the form 3508EZ, or even the 3508, it will talk about FTE reduction exceptions. And there's actually slides in this presentation, if you go back to the FTE section when you get them, that talk about that in detail and that specific rule. Okay, how do I show proof of owner's compensation? This question's been asked several times. I've not seen anyone where, I'm assuming we're talking about a sole proprietor here. I've not seen any lender ask for support that you actually moved money from the business account to yourself. I've seen that they're just asking for a copy of the Schedule C. Is that consistent with what you see, Amber?
Yeah, so if you have owner compensation replacement, it's going to be capped at $20,833, which is under that $150,000 threshold. So you don't have to provide upfront documentation on that unless the SBA asks for it. Now, I have had the SBA come back on 2 separate businesses asking for that proof of owner's compensation. You can provide your Schedule C, which shows that you were eligible for that. You can write a check to yourself. You can do transfers. You can show that you use the funds in your bank account if you don't have a separate bank account. So a lot of small businesses, independent contractors, sole proprietors, you may not have a separate business account, especially if you're just getting a 1099. So you can just provide a copy of your bank statement as well. The SBA hasn't asked for more than that. It doesn't mean that they couldn't in the future. But one of the easiest things that I've just been recommending to people is to, over an 11-week period or over a 3-month period, just split your PPP into 3 and make a monthly transfer to your bank account, or write a check, or just document how you're using the expenditures, the funds, just in case you get asked for it. But it is pretty rare that the SBA is asking for additional documentation on owner compensation replacement for under $150,000 PPPs.
Okay, so there's a question about PEOs. So you're still eligible to take, to utilize your wages that you paid using a PEO. And the question is, they're not giving us the 941s, what can we do? So my understanding is that you just provide the reports that you were given from the PEO that show the wages paid for your employees. And that should be sufficient documentation, because the PEO is right. I mean, the PEO files a 941 at a super high level, right? It includes all the wages of every one of their clients that's on their list, right? So that could be thousands and thousands of people. So they probably don't want to give you the 941. And honestly, it's not going to tie to anything that you're submitting, because it includes those thousands of people, not just the people on your payroll. So the lender should be able to accept whatever reports the PEO gives you that support your weekly, biweekly, whatever payroll data. And so
PEO can also write a letter. We're accepting letters that state the total amount of wages that are paid on behalf of the employer through the PEO. So a letter would be sufficient as well.
Okay, let's see. I think we've answered all the questions about owner compensation for sole proprietors. So I'm going to take the big one, which is to clarify, may I get employee retention credit and PPP forgiveness? The answer to that is yes. In December, Congress changed the rule and said anyone who got a PPP loan is also eligible for the ERC. If you go back to that boot camp where I talked about the ERC, and I don't know if Robert remembers when that was, but it was me and Tom, his last name starts with an, Tom Fulcher. We spoke about that a few months ago. I would recommend that you watch that because it gets complicated. I mean, if you think this is bad, managing maximization of PPP and ERC is a lot more math than what we just went through. And I know that personally, because that's what I've been doing for the last 3 months. And basically the overall concept is you have whatever period you're eligible for ERC, and you have whatever period you're eligible is your covered period for PPP. So you have to allocate wages to each program because you cannot double dip. So if you're going to use X dollars of, wages for PPP, you cannot use those exact same wages for the ERC. So it takes a lot of maneuvering, and I suggest you reach out to your accountant, your CPA, whatever business advisor you have for assistance, because it gets challenging. I mean, it's not a lot of hard math, but you really have to sit there and think about it and realize, okay, what can I use for this? What can I use for that? The key being you want to make sure you maximize PPP first, because that's dollar for dollar. Whereas the Employee Retention Credit Program for 2020 is 50 cents on the dollar, and for 2021 is 70 cents on the dollar. So hopefully that answers that question. Let me see if there's any more.
Carrie, I posted in the chat the link to the session that you did with Tom Fulcher, where you talked about ERC. So
thank you. Next question about the EIDL loan. So correct, that is still not forgivable. That's a real loan that you have to pay back.
Yep, unless you got the advance. The advance portion is not, you don't have to pay back. That was a grant portion. Looks like there was a couple of questions around the owner compensation. You want to make sure you use that owner compensation replacement if you're self-employed and you use your Schedule C or your 1065 K1 line 14A if you're a partnership. You want to make sure you use those funds over a minimum of 11 weeks. It's 10 and a half weeks technically, but you want to use those funds over a minimum of 11-week period in order to be eligible for full forgiveness. If you only use it over an 8-week period, then you will only be eligible for 8/52 of that period. And it's a very complicated math calculation that has to be done. So just err on the side of caution and use your funds over an 11-week period in order to make sure that you're eligible for full forgiveness.
excellent. Well, that's perfect. Wrapped up those questions. Great ending. I see that Carrie Ann has, they listed their contact information for Amber and Carrie Ann. So you have it there on the screen. Again, this slide deck will be shared later today on the website. You'll be able to find it there along with the recording of the presentation. So we want to thank Amber and Carrie Ann for sharing this information again with us today. We appreciate all their time and effort to put this together and to be part of the boot camp series. So thank you very much. For all those who attended, thank you for attending. We hope to see you on future boot camp sessions as well. We have another one tomorrow morning, 9 a.m. Hopefully you can make that. Until then, wish everybody have a great day. And we will talk to you soon. Thank you.
Bye, thank you.
Thanks.